Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cspc Pharmaceutical Group Limited Annual Report. Cspc Pharmaceutical Group Limited is a leading pharmaceutical company that provides a wide range of products and services globally. The company operates through three main segments: finished drugs, bulk products, and functional food and others. In the finished drugs segment, Cspc offers various medications for different health conditions, including NBP soft capsules and injections for acute ischemic stroke, ulaning capsules and injections to treat mild to moderate memory and mental impairment, and duomisu for lymphoma, multiple myeloma, ovarian and breast cancers. The company also provides medications for infections such as shulyoke, pneumoling, waihang, and xinweihang, as well as treatments for hypertension, diabetes, osteoporosis, arthritis, and other conditions. In addition to finished drugs, Cspc also manufactures bulk products, including API's active pharmaceutical ingredients, such as antibiotics, vitamin C, and caffeine. The company's functional food and others segment offers a range of functional food products and healthcare services. Furthermore, Cspc has a strategic collaboration with AstraZeneca plc to advance the discovery and development of novel oral candidates for treating diseases across multiple indications and therapies for obesity and type 2 diabetes. With its extensive product portfolio and global presence, Cspc Pharmaceutical Group Limited is well positioned to meet the growing demand for pharmaceutical products and services worldwide. Some of the specific businesses and services provided by Cspc include finished drugs, NBP soft capsules and injections, ulaning capsules and injections, duomisu, shulyoke, pneumoling, waihang, xinweihang, xuaning, enkun, kixeo, linmaxin, shungoksin, gubeng, gubangia, gaishunsong bulk products. APIs such as antibiotics, vitamin C, and caffeine functional food products, healthcare services strategic collaboration with AstraZeneca plc for novel oral candidates. Cspc Pharmaceutical Group Limited market capitalization of $106 billion is materially smaller than most of its industry peers, of roughly $220 billion. Cspc Pharmaceutical Group Limited trades at a lower price-to-earnings ratio of 24 times and a lower price-to-book ratio of 2.82 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The balance sheet appears very conservative, with liabilities representing only 24% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 3.23%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified from the extracted summaries. On the growth side, internationalization and overseas market expansion have been key contributors to revenue growth. The company's out-licensing deals, R&D innovation, and advancements in innovative drug development have also driven revenue growth. Additionally, successful market launches of new products, strategic collaborations with AstraZeneca, and proactive addressing of market challenges have contributed to the company's revenue growth. On the decline side, finished drugs have experienced a significant decline of 13.3%. The oncology segment has seen a substantial decline of 50%, while anti-infectives and nervous system segments have also declined moderately. Cardiovascular and digestion and metabolism segments have experienced mild declines. The inclusion of two products in centralized procurement has led to a decrease in revenue, as well as an increase in R&D expenses due to spending on clinical trials. In terms of specific drivers, license fee income has seen significant growth, with a 9,931.4% increase. Upfront payments from AstraZeneca and other companies have also contributed to revenue growth. However, the sale of goods declined by 20.6%, contributing to revenue decline. Overall, the company's revenue growth is driven by its ability to expand into new markets, innovate through R&D, and secure strategic collaborations, while revenue decline is primarily due to challenges in the finished drug business and oncology segment. The net income of the company experienced a significant decline of RMB 12,903 million, representing a 10.4% decrease. This downturn can be attributed to several factors, including the inclusion of 2 products in centralized procurement and increased spending on research and development, R&D. As a result, the company's profit margins were also affected. The gross profit margin took a hit, decreasing by 4.4 percentage points to 65.6%. However, operating expenses as a percentage of revenue showed an improvement due to effective cost control and optimization efforts implemented by the company. Despite this positive development, the overall impact on net income was negative, highlighting the need for further strategic adjustments to mitigate these losses. The company's financial performance indicates a strong ability to generate positive operating cash flow. According to the provided information, the net cash inflow from operating activities in 2025 was a significant RMB 5,832 million. This substantial amount of cash generated from operations demonstrates the company's efficiency and effectiveness in managing its resources. Furthermore, the operating cash flow, inferred, for the same period was reported at RMB 421,119. While this figure is lower than the net cash inflow, it still indicates a positive operating cash flow, which is a crucial indicator of a company's financial health. The presence of positive operating cash flow suggests that the company has sufficient liquidity to meet its short-term obligations and invest in future growth opportunities. The company's debt level has undergone significant changes over the past year. Notably, bank borrowings have decreased by RMB 63 million, from RMB 392 million in 2024 to RMB 329 million in the current period. This reduction is a positive indicator of the company's financial health. However, lease liabilities have increased by RMB 72,702, from RMB 58,991 in 2024 to RMB 131,693 in 2025. While this may seem concerning, it is essential to consider that this change occurred over a one-year period and may not necessarily indicate a long-term trend. The gearing ratio has also decreased, from 1.2% in 2024 to 1% in the current period. This reduction suggests that the company's debt level is becoming more manageable compared to its equity. Furthermore, structured bank deposits have increased by RMB 1,469 million, from RMB 1,307 million in 2024 to RMB 12,776 million in the current period. Overall, while there are some fluctuations in specific areas of the company's debt, the overall trend suggests a decrease in debt level and interest expenses. The performance of various segments and regions within the company has been mixed. On the negative side, finished drugs have seen a decline in sales, with a drop of 13.3% on page 1 and 6.3% on page 47. Vitamin C also experienced a decrease in revenue, down by 11.9% on page 47. In contrast, bulk products have shown an increase in revenue, rising by 2.1% on page 1 and continuing to grow on page 47. Functional food and other segments have also performed well, with a growth rate of 4.5% on page 1. Additionally, the company's license fee income has seen a significant surge, increasing from $17,831 to $1,788,701. In terms of regional performance, Europe has been the worst affected, experiencing a staggering 48% decrease in revenue between 2024 and 2025. North America also saw a decline, with a 4% drop in revenue over the same period. Other Asian regions were not immune to the downturn either, with a 7% decrease in revenue from 2024 to 2025. Management is optimistic about the company's future prospects. They plan to maintain a focus on core businesses while implementing management reforms to enhance efficiency. A dual-engine strategy will propel growth, combining innovation with internationalization efforts. This approach aims to drive steady progress and expand the company's reach globally. Additionally, significant investment in research and development (R&D) is expected, utilizing 8 innovative platforms to accelerate the discovery of new drugs. The company has a history of paying dividends to its shareholders. On page 1, it is mentioned that the full-year dividend per share was $29, which includes both the interim and final dividend payments. Specifically, the final dividend paid in 2024 was $15 per share. In addition, on page 51, it is noted that an interim dividend was paid in 2025, indicating that the company continues to pay dividends on a regular basis. Furthermore, a proposed final dividend for the current year is also mentioned, suggesting that the company's dividend payment policy remains unchanged. Overall, this suggests that the company has a consistent track record of paying dividends and does not appear to have bought back shares in lieu of paying dividends. That concludes the financial summary for Cspc Pharmaceutical Group Limited. Feel free to comment below, and I will be happy to answer them when possible.